And what's up, y'all? It's your boy Al, the neighborhood economist. And as always, I appreciate y'all tapping in and tuning in to the Ticker Apparel channel on YouTube and supporting the brand on TICKRAPPAREL.com. Super excited about what we're doing here. And just to lay it out for everybody who is new to the channel, TICKR Apparel is seeking to close the wealth gap in the United States through crypto assets and fashion. Never been done before, and it's really that simple. And so the question is exactly how you do that. Let me go to the screen share so you guys can see what's going on. So right now we got the soft launch of TICKR Apparel. We got 4 premium t-shirts. Cool thing about these tees is with every purchase of on this website of any shirt, hopefully you'll buy all 4 of the shirts. And there's limited quantities of the shirts. But in any event, so for every purchase that you make, you're gonna receive 10% of the gross sale back in Satoshis. Satoshis are fractal bitcoins. And so this has never been done. And so the question is, well, if I spend $100 on the website, then that's like $10 in Satoshis. You'll receive your Satoshis via Coinbase. And so when you enter in your email address to confirm your payment, please make sure you take your time, you enter in your email address correctly, because you're going to receive a link in about 2 to 3 days after the purchase for you to retrieve your Satoshis. Now, if you don't have a Coinbase account, super simple to open one. There's several tutorials on YouTube to walk you through it, and it's really self-explanatory. If you click the link, you will open it. It's really easy, guys. Really, really, really easy. So, how do we close the wealth gap? Well, over time, what we're doing is we're making investing part of the consumer process. No gimmicks attached, right? So you're gonna be a part of a hyper growth industry. Crypto, metaverse, blockchain is really still in its infancy. If this was a baseball game, we're probably in the bottom of the first inning. We got a lot of runway, and I mean a lot of runway in front of us. And so, for the first time in history, black folks and other minority groups have access without the red tape and really just kind of blatant keeping us out of you know the conversation, right? Like the decentralized nature of cryptocurrency is going to be huge for wealth generation going forward, but especially for black folks. So for the first time, we can exchange appreciating assets with just a couple of clicks. And that's why I'm going to be sending you guys this. And so over time, we got to have a long-term perspective just to bring this, just to give you guys one stat. And I need to try to pull it up so you guys can see it, so you know I'm not making this up. But $1,000 invested in Bitcoin 10, 12 years ago would have made you a multimillionaire. The average American spends roughly about $200 a month on apparel. You multiply that times 12, that's $2,400. If you take 10% of that, that's $240 a year. Every year. Your dollar cost average into those Satoshis, $1,000 10, 12 years ago would have made you a millionaire in Bitcoin. I'm not guaranteeing that that's going to happen, but what I can tell you is that we're in the early stage of a hyper growth industry. It's going to be extremely important that we take advantage of it. And why wouldn't you, if you can benefit? If I'm going to buy clothes anyway, so if I could benefit and help myself in doing that in my community, why wouldn't I do that? So, again, for the first time in history, black folks and minority groups have access without a lot of red tape and politics involved in a tool and a mechanism that's designed to build wealth in a hyper growth way. But we still have to, be patient. Dollar cost average. Let's have a long term look at this thing. But I tell you what, there's cause for Bitcoin to be at over $1 million in 8 years. I would hate for you to go back and look at this video and think, man, I've been buying clothes for the last 8 years. You're telling me I could have been, buying TICKR Apparel clothes, and we're just starting with t-shirts. We're getting far beyond that. But you could have been on the site purchasing stuff from TICKR Apparel and possibly have increased your net worth by just doing something you would have already done anyway. Just makes perfect sense. So I'm super excited about this, and I hope you guys are as well. Again, I don't know of any other YouTube channel tackling a mission as noble and a humanitarian goal as great as this one. So I'm super excited the way that we're approaching this, and thank you guys for coming along and joining the ride, believing in yourselves, and creating your own bootstraps and pulling yourselves up with those bootstraps. So let's talk about why you're here. Why you're here is because you want to know, hey man, is crypto in a bubble? Are we still in a crypto winter, or is this a pullback? Because it's not uncommon when you go back and look at the history of Bitcoin and crypto to have 50+% drops in an asset during an actual bull run. That happened in July of 2021. Had had the fortitude and diamond hands, as they are called in the crypto space, to hold your position, you wouldn't have lost. Or if you would have started buying in, again, you buy low, sell high. Back in July, there was an explosive run from basically the bottom in July through November of 2021. So right now, we got like a 4-minute video on deck that I'm going to be reacting to for the first time. It's a guy named Harry Dent. I follow this guy. I think it's important that when you invest, you have a well-rounded perspective. I'm naturally, optimistic, but in your kind of blind optimism, sometimes, we miss planning certain things or we miss seeing certain things. This guy's probably as bearish as they comes, but what he does and what I like about it is he's looking at it from a historical context. So he's just looking at like geographic and demographic trends over hundreds of years. Ray Dalio does this as well. And so there are people out there that believe that this is a huge, gigantic bubble. And I tend to have some thoughts about it. We had a huge sell-off in the stock market in January, last month. You got Square and PayPal. Some of these stocks are down 60% or better from their highs. I mean, they got absolutely slammed. And so the question is, can it go down some more? The answer is yes. Can it bounce back? It could. Yeah, the answer is yes to that too. The question is, the burning question, the $100 million question is, where are we in the cycle? Should I be putting new money to work? Should I be dollar cost averaging is always, in my opinion, the best way to kind of get into the markets. Let me pause for a second. When we talk about opinions, this is edutainment. So I'm doing this for education and entertainment, guys. This is not financial advice. Any information that you receive on this channel, please vet, please do your own research. I am not encouraging you to go buy or sell anything. I'm just telling you guys my opinion and to try to give you some information to help you think and get you involved in this this super hyper growth and emerging space known as cryptocurrency and blockchain. So let's go ahead and get into it. I've talked quite a bit. Let me go to my screen share here. But yeah, this guy Harry Dent, he's very interesting. I think he's like a Harvard professor, or he has a Harvard MBA or something. So you kind of get gold stamped when you go to any one of those Ivy League schools. Okay, yeah, Harry Dent rant. Let's see what this guy. Pull him up here. Where you at, Harry? What you got going on, man? I think I'm gonna have to mute my mic so it's not.
So I'm not the only one predicting a big crash here. Jeremy Grantham, he only comes out once in a blue moon when he sees something big happening, particularly on the downside. He's been warning the last few months. He's been a little early too. This bubble keeps being pushed, but he's saying we're getting very near, and he's saying 50% crash. Well, for me, if we're talking about the crash of a lifetime, which both of us are here, it's got to be more than that. The 73, 74 crash, and when we weren't in a bubble, was 50%.
My bad, job.
First bubble in this whole scenario, peaking, in 2000 with the Nasdaq was down 78%, and the S&P 500 was down 56%. So what is my prediction here? 86% crash. Now that's just my best projection, but it's
hold on, let me pause it.
100-year channel.
Oh, 86% crash. Hey, I told y'all the boy's a big time bear. That don't mean he's wrong though. It's just important. He's about to go into this 100-year talk and demographic kind of cycle, and it makes sense what he's saying. It's just important to listen to this stuff. Now, 80% crash, as much as that sounds kind of crazy, it's happened before. It actually happened in 2001 or 2000. So when the market topped, and you got to think the way crypto, NFTs, the whole space has just been mooning and going crazy. It's probably, during a bear market, typically Bitcoin will drop 80%. The rest of the altcoins will drop 90% or better. And so that's not uncommon. The question is, are stocks going to drop that much? Which, again, if you go back to the dot-com bubble, the NASDAQ at its peak, from peak to trough, meaning from the top to the absolute bottom, it took about 18 to 24 months. It's about a year and a half, 2 years. It dropped 80%. I say that just for historical context because it's not uncommon. Like, the stock market has dropped, the NASDAQ tech stocks have dropped 80% before. And typically, what happens in these downtrends is like people are trying to catch a falling knife. So a lot of people have made a lot of money between basically the C19 bottom and then the peak back in November of last year, of 2021. And so there's still a lot of money people are going to throw at buying opportunities in the dips. The problem is, if the dips are going down, that's why they call it catching the falling knife, because when a knife falls, if you don't catch it by the handle, if you catch it by the blade, you cut yourself, right? And so that's where that term comes from. But ultimately, we have to be very vigilant and cognizant. I wanted to put this out here for you guys so you were just aware, because he's obviously he's a lot more versed than I am from a historical perspective. And again, I told you guys in a previous video, you don't have to be the brightest crayon in the box or the sharpest knife in the drawer. I like to think that I'm a pretty bright crayon and a pretty sharp knife, but I listen to brighter crayons and sharper knives, or more well-versed people in a specific area, because they're going to have more intel, more information. And, I like to hear what's going on. So let's go ahead and run this and let's see what's happening. Harry, where you at?
In the S&P 500. Peak at 48.19 here recently, down to the bottom trend line, which would be the same bottom trend line that 1932 hit, 670. That's how I get 86%. Now, what has to happen first, and what I've been looking for, because it's so important, the first crash. And remember, I've reminded subscribers and our followers so many times, half or more of a major bubble like this will happen in the first 2 to 3 months. The average is 41% crash in 2.6 months. Okay.
All right, had to get at a pause. Important to remember that. According to him, that you're going to get most half of a crash. So if he's projecting that the stock market is going to go down, he hadn't said anything about crypto yet, so I don't know if he is. But he's projecting that the stock market is going to go down 86%, and that in 2 months' time, half of that is going to take place. That's wild. That's a pretty big drop. Real quick, guys, I know y'all see the banner at the bottom. Please like and subscribe to the page if you're finding huge value and you're enjoying the content and loving and supporting the mission, man. I appreciate it. Liking and subscribing helps get that out into the YouTube verse and help us continue to close this wealth gap in the United States through crypto assets and dope fashion. So I appreciate that, man. Y'all like and subscribe. Also go to TICKRAPPAREL.com, get your premium TICKR Apparel t-shirt, and receive 10% of the gross sales back in Satoshis, man. I love y'all. I appreciate it. Let's keep this going.
Well, this one is shaping up to be bigger. Fundamentally, why? They have stretched this bubble way longer. This second bubble burst should have been late 2019, early 2020, into late 2022 are my best cycles for the long-term bottom I'm looking for. With late 2022 be the biggest cycle bottom of our lifetimes, even bigger than 82, okay? So that's what it should be. Well, they push us up. So we're gonna have to go down faster, harder, and we're likely to bleed into late 2023 or something like that. But I do think most of this bubble is going to happen this year if we did peak here on January 4th. And that's what it's looking like. We've had the succession of tops I've covered in the past. The S&P was the final top on January 4th. And that means this first crash should go into about mid to late March, that kind of like 2.3 to 2.6 months or so, okay? And again, megaphone pattern I have says it could be 58%. The target on that is 2,000 on the S&P 500. This would be the biggest first crash in history, but that would not surprise me one bit, the way they've stretched this bubble.
58%. I don't know if y'all can see my face, but a 58% crash in like 2 months. Hey man, it's gonna be some pain out here. I'm trying to tell you. 58%, dog. Are you serious? But you know, that's what his data is showing him, and I don't dismiss what I've learned and just over time is to not listen with judgment. Like, to listen to this information. If you agree or disagree, then you agree, you stand where you stand. But you should take into account what this man is saying. He has the academic backing and historical context. Is his timing? It's hard to time anything, guys, because I've followed this dude for a minute. Like he was saying, it was supposed to happen earlier than this. He was wrong. But if he ends up being right or anywhere close to right, he said a 40% crash. Now he's saying his projections, because they pushed it up the way that they pushed it. Now, when he talks about pushing it up, he's talking about all the stimulus that got dumped into the economy, guys. So the question is, was the growth real? People got money. You got the stimulus checks, you got the PPP loans, you had all this stuff happening, and it didn't create real. You wanted to artificially kind of create demand, right, to keep the economy from tanking from C19. But the question is, now that the Federal Reserve is rolling back all this stimulus, and no more $1,200 checks are coming, and no more $500 a month checks are coming for kids, or that whatever that was, that child tax credit. Now the question is, are people still going to be as confident as in spending? Because we live in a consumer-led economy. If people aren't spending, then that's going to impact everything. Even if they, slice spending just a little bit, it's going to have a pretty huge impact. And he's saying that things are off balance, and essentially the spending kind of created this artificial bubble. And now that you don't have the spending, then the house of cards ultimately ends up falling. 58% in 2 months is a hell of a fall. That's a hell of a fall, man. I hope you're wrong, but I'm listening. And you want to be prepared. I'm going to do another video on exactly how to become a crypto millionaire, which I'm trying to get there. This is the way that I believe we could all become a crypto millionaire in, say, the next 3 to 4 years at the most, I believe. But that video's coming. Let's go ahead and finish this up and see what your boy Harry got. Your wild boy Harry.
So where are we? We're well into it. This is looking like the first crash now. We broke 2,100. That was my line in the sand on the Russell 2000. Mini bottoms there over the last year plus. The S&P 500 channel broke at 4,600, and we're well below that now. Bitcoin is now down 50%. The Russell 2000, the leading sector of stocks, the small caps, down 20%. The NASDAQ tech stocks down 15%. And the S&P down the least at 10%. So we have a long way to go here. We may even get a little bounce here with this recent sell-off. Things are a little oversold, but a lot of people saying, oh, this is the bottom, this is a buying opportunity. I say no. This is not another correction. This is very, very likely the top of our lifetime, and the first crash now could be as much as 58%. So get ready, folks. Do not tally on this. I will keep people updated, my subscribers. I have a lot of updates recently in such a critical time, and I will let people know if it doesn't look like this is a top, but it is looking like a top, and this first crash is underway, and it will happen faster than anybody is forecasting, anybody expects. Again, we could be down as much as 58%, 2,000 on the S&P 500 by the end of March. So again, take this seriously.
I said, man, that boy here, wow. Hey, hey, man, look, I told you. Uh, he was a bear. He's a bear all day long. I don't really know, man. Like some of what he says resonates with me because I remember the market back in 2007, 2008 during the housing boom, and housing prices were appreciating like you wouldn't believe, kind of like they are now. It was like you would just it benefited you to buy a house and then move out in 2 years and take the appreciation. Like it was just you buy a $300,000 house and then you're up like 40% in 2 years. It's a cash out. Take the couple, take the 100 grand and go on somewhere. Do it again in 2 more years. It just made sense. But that turned out to be a bubble. When you look at how stocks run up, and for people who weren't, let me say this: shout out to everybody who won during the COVID. Who became pandemic millionaires. Here's what I want to say: be very careful because a lot of people haven't seen what a true crash and a true bear market looks like. What happened with COVID was more of a pullback. Like it happened so fast, and then we got the V-shaped recovery because of the stimulus. When you get into a real fundamental breakdown in the economy and it's going down, the dips feel like buying opportunities, like I was just telling you guys. But it's like it keeps dipping, but the chart isn't going up to the right. It's like it's going down to the left. You get the dip, like, oh man, we're back. And that thing go down some more. Like, it's not getting back up. So it's important to understand what, bearish trends look like from a technical perspective. And we'll talk about that on another video. But I'm telling y'all, man, like my some of my concern is for people who came up, and again, congrats to those who did during C19 pandemonium. They haven't seen or experienced a market like 2007 where you got these rallies kind of like you're having in the market now, but it ended up not being real. It was a fake. It was a bull trap. And that ended up, it hurt me. I mean, it sunk me. I was trying to win and I didn't. But I'm just telling y'all, man, like I know that type of message doesn't resonate on YouTube because everybody wants to hear we're going to the moon and 34, 100, 100x, 30x, 50x. Like I could make videos about that all day, but that wouldn't be doing you guys any good. It would actually be a disservice to the community that we're trying to build. Because what I don't want you guys to do, like I did in '07, is essentially buy the top, and then you're coming in with as much as you can, trying to change your life and change your family's life. It's all well intentions, but I tell you, man, it hurts when you get slapped by 80-90%. It absolutely stings like you wouldn't believe. Because if you put up a huge chunk of money, whether that's your life savings or whatever amount it is, like what is relative, like what a lot is to any one particular person. But if you put up a lot of money and you lose, you ain't feeling that. So man, I follow Harry Dent. I listen to him a lot. A lot of what he says resonates with me, just because when we saw the hockey stick kind of growth in the housing market, it ended up being a crash. And generally speaking, stocks, mature stocks, blue chip stocks don't have the growth that we've seen in Apple and Amazon. Like these huge companies typically don't double in like 12, 16, 18 months. I mean, stuff has just been, well, you got Tesla. Tesla's up 10x or better in like 18, 20 months. Now, I'm not mad at that because I owned Tesla at one point, but it's not normal. And because a lot of people came up. They think what took place in the stock market during that C19 bottom in the V-shaped recovery, y'all think that's normal. And if this true, if Harry is right, there's gonna be blood in the streets. But I will tell you this: if you're prepared, keep some cash available. If you're prepared, man, look here. It's gonna be some cheap assets available on the other side of a crash. So that's this video. Just kind of wanted to lay that out. This went a little bit longer than I thought it was gonna go, but it's cool. I think it was great value. I think you guys appreciate it. And I think again, it's just important that you are well rounded in your analysis of investing, especially crypto. Well, any investment really, but especially an investment as new as crypto. So he was talking specifically about the stock market. He was talking about all markets, actually. I've listened to Harry on some other stuff. I'll pull up some of his other videos, but I'll keep y'all in tune with some of the stuff he's talking about. There's another guy out there that I'll probably pull up as well. But again, man, I just want to present a full, well-rounded picture so you guys can see, because I can come on here and be optimistic, be like, hey, this is about to happen. But no, if it doesn't happen, y'all be looking at me like, man, I bought this based on you see it. And again, I told you, I'm not recommending that you do anything, but I also understand people are seeking information in order to make a decision on YouTube. People put disclaimer out there so we can cover ourselves, but I also understand because I've done that, right? You go on to YouTube you're looking at buying a car. You look at the car reviews, just same thing with a phone. It helps you make a decision. So I'm not recommending it, but I understand you're surfing YouTube to find some information. So I just want to make sure that I'm being responsible and not just selling hopium to you guys to think that everything's gonna go to the moon all the time. So that's what that is, man. I appreciate you guys. Love and blessings. Y'all take care. Till the next time. We're out.